Hello everyone. How you guys doing? I'll be just doing a simple rundown on what to expect in the markets, and that's about it. Not gonna. I'm gonna do a full FOMC and then prep, and then just some market updates. I'm not expecting much, just few positions to happen, maybe at 10 because we have news, but that's about it. But the move will happen later during FOMC. All right, let's get started. Hello everyone, how you guys doing? Today I'll be doing a full FOMC prep, and let's just get right to it. And let me just read what I've written before. So the US Federal Reserve has maintained its federal fund rate in the restrictive range of 5.25 to 5.55% since mid-2023. The decision reflects the Fed's cautious approach to manage inflation, which recently edged to 3.2% in February 2024 from 3.1% in January. The rate level is viewed by the Fed as necessary to gradually steer inflation towards their 2% goal without participating in sharp economic slowdown. Market participations, particularly from the stock market, have been eager for rate cuts to stimulate growth, but the Fed firm stance suggests a focused long-term stability over short-term gains. This is part due to inflation pressures from various sectors, including wages, services, which prevent early pivot from the current policies without risking a repeat of 1970s style inflationary spiral, which is called the Great Inflation. Chairman Powell and the Federal Reserve have indicated a commitment to keep rates higher for longer, echoing the lessons of the past inflationary periods. This stance aims to temper market expectations for rapid rate cuts to ensure that inflation controls remains priority, even as the monitor economic data closely for any signs of that might justify policy adjustments. In essence, the Federal Reserve's current policy settings are balancing act aimed to cool down inflation while avoiding undue harm to economic growth, all amidst varied pressures from the global economic conditions and domestic markets. It's very important to know that the time is time to give some logical market direction. We'll have more data coming today, Thursdays and Fridays, in terms of economic calendar. As let me show you guys here. We have IS final manufacturing PMI, ISM manufacturing PMI, and JOLTS job opening, and then later FOMC. We later tomorrow we have unemployment claims, which is okay, and trade balance. That's it. And on Friday, we have average earning hours, NFP, and unemployment rate, and ISM PMI. So let's just continue what I've written. We believe more data coming in today. It's believed that it would be good by the Fed to basically remove the rate cut hopes and give some logical guidance. By the way, this is just opinion wise and what I expect to happen. Markets have been on smokes and mirrors since December. A lot of market movement is moving like they know the rate cut's gonna happen. In the past three of FOMCs, they have been very neutral, and the investors and institutions are pricing in rate cuts. The data drops suggest otherwise. I believe we may see some hawkish tone from the in this FOMC and give us better outlook this year. As for other central banks, we are going to be seeing them drop even more against the dollar. Reasons being, ECB doesn't expect the EU to be as resilient in terms of their economy. Even though they have been showing some proper movement recently with the data drops in the past few weeks, but the Eurozone is not as good with the high rates for sustained periods, so it's expected for them to do rate cuts sooner than the Fed. The same thing for the BOE. The inflation reports are more towards their goal, and it's sustainable for them to rate cut sooner, and the UK cannot be very high rates for a long time, as we see their GDP dropped and we stagnate for mostly with little deviation. Overall, I don't expect them to keep rates for longer, which makes the FX market easier to trade the Euro USD, GBP USD, and so forth. We have to wait what the Fed says during the speech and the conference. NYC's, yeah, I'm going to be now explaining the FOMC prep. Let's present. All right, I hope you guys can see this. Just give me a sec. Let me see if you can see this. Right. See this? Get rid of 1 day. Oh shit. Just give me a sec. Let me see. Okay, yeah, you can see this. All right. So for the FOMC prep, the view on interest rate, most economists predict the Federal Reserve will maintain its interest rate within 5.25%. This view is widely supported by economic indicators that suggest inflation, while off its peak, still presents a significant concern. Market anticipation for unchanged rate aligns with the cautious approach of the Federal Reserve has adopted in the recent months, focusing on achieving more sustainable inflation rate close to its 2% target before making any move to rate cuts. Now, what the institution's perspective is, the UniCredit posits that while the Fed will likely keep rates steady, we could see a declaration of showing the pace of quantitative tightening QT starting in June. They are anticipated that Chair Fed Powell will emphasize that ongoing need for patience before considering rate reduction, suggesting a possible rate cut later this year. I'm expecting September, even if that happens, but at least we may see one if inflation trends towards the target. Societe Generale expects the meeting to lean towards less dovish stance than previously, essentially hawkish to neutral, but I'm expecting a more hawkish tone from this FOMC. Due to the recent inflation trends, weekends and strong economic signals such as employment and consumer spending, they suggest that while overall direction might still point to eventual rate cuts, and any immediate adjustments are unlikely to maintain for a higher long period of time. Norma predicts a less optimistic tone from the Fed, essentially hawkish, particularly concerning inflation, which might result in the continuation of current rate levels longer than some markets participants expect. The foresee of possibility that the Fed might adjust its communications to prepare markets for a prolonged high interest rate if inflation does not subside as hoped. Morgan Stanley and Wells Fargo both have the same sentiment, noting that the stubborn inflation and the resilient economic indicator provides little justification for the Fed to ease policy soon. They highlight that the consumer behavior remains strong, which could further fuel inflation pressure, suggesting that cautious approach from the Fed is likely. Now, balance sheet adjustments. A significant point of focus will be any updates on the Fed's balance sheet policies. There is a general expectation that the Fed may announce plans to adjust the pace of the quantitative tightening QT, possibly signaling a more gradual reduction in its balance sheets activities to avoid more disruptions and maintain favorable funding conditions. This careful data-dependent approach is reflective of the Fed's priority to ensure economic stability and gradual guide to inflation back to its target without triggering adverse market reactions or economic turndowns. This update meeting will be reaffirm its stance, while with Fed Chair Powell reiterating the need for ongoing vigilance and readiness to adjust policies as necessary based on the incoming data. Now, economic indicators. The upcoming FOMC does not just focus on interest rates and balance sheets. It also involves interpreting key economic indicators that influence the Fed's decision. These indicators include inflation metrics like consumer price index, CPI, and personal consumption expenditure, PCE, along with employment data, GDP growth, and consumer spending trends. Inflation concerns. Despite some disinflationary trends, recent reports show that the inflation remains above the 2% target. Core PCE, which is primary gauge for the Fed, shows a rise of 3.7% annualized in the first quarter of 2024, suggests that the inflation pressures are still significant. Employment and GDP growth. Employment has shown resilience with the payroll increase significantly in early months of 2024. This robust jobs market coupled with GDP growth of 1.6% in the first quarter indicates sustained economic activity, which complicates the narrative around immediate rate cuts. Now, let's see what we are looking at for. The broader consensus suggests that while immediate policy changes are unlikely, the FOMC meeting will be critical for setting the tone for the monetary policy for the latter half of the year. essentially from now on to, I believe, September, which will be the first rate cut. But let's see what happens. Investors and analysts will be closely watching any shift in the language concerning inflation and economic growth that might indicate the Fed's readiness to adjust its rate path later this year. Furthermore, any unexpected announcement regarding the pace of QT, quantitative tightening, or more hawkish signal would sway the markets unexpectedly, underscoring the importance of the Fed's communication strategy. Uncertain times. Overall, the May 1st FOMC meeting is set to be a pivotal event, likely to confirm the higher for longer interest rate scenario, while also possibly laying the groundwork for the policy shift in the months ahead, should economic calendars permit. This delicate balance reflects the Fed's ongoing challenge to navigate between controlling inflation and supporting continued economic growth. Now, potential scenarios for FOMC. As we move beyond the FOMC meeting on May 1st, several potential economic scenarios could unfold based on Federal Reserve decisions, and the economic indicators suggest each scenario carries implications for the monetary policy and market dynamics. Scenario 1. Continued high inflation. Despite recent economic data, if inflation remains stubbornly high, suggested by the March CPI and core CPI monthly increase of 0.4% higher than forecast, this may compel the Fed to maintain a higher for longer approach, as stated earlier, for the interest rates. This scenario could lead to continued strength in the dollar as higher interest rates attract foreign capital. However, this could pressure equity markets, especially interest-sensitive sectors like real estate, utilities, commodities like gold may suffer as they become less attractive compared to yield-bearing assets, bonds. Scenario 2. Signal of economic softening. If subsequent data show that the sign of economic softening, and particularly in consumer spending and jobs creation, despite the 1.1% in core retail sales, the Fed might be open to rate cuts later this year. This potential softening could boost equities, particularly growth-oriented sector that benefit from lowering borrowing costs. This bond market might see a drop in the yields as investors start pricing in future rate cuts, leading to a weaker dollar, which could provide relief for the US priced commodities. Now, scenario 3, mixed economic signals. Given the mixed economic signals from the recent economic data, such as a higher expected annual CPI at 3.5% and a stable monthly core PCE, there might be continued market uncertainty. In the scenario, the Federal Reserve would likely maintain its cautious approach, keeping all options open without committing any specific policy moving path forward. Market reactions could be volatile, with short-term fluctuation based on the interpretation of each piece of economic data or Fed's commentary. Now, scenario 4, clear progression towards inflation target. If inflation measuring unexpectedly rapid progress to the 2% Fed's 2% target, the Federal Reserve could become more vocal about the potential of rate cuts. Such a scenario would be lead to a rally both in equities and bonds, as reduced interest rate expect lead to lower yields. This could result in a weaker dollar, boost commodities and emerging market assets, and global investors seek higher returns in the outside of the US. Now, let's jump in charts and see what we have. So let's jump in the 4-hour. We have seen gold in the past few months rally to 2420s. 2400 is a sustained point where price straight away reacts. We hit 2400, we had a reaction upwards, and then we straight away came down. Same thing, we had 2420s again react and then straight away come down. This is mainly with the higher inflation reports, PCE, and everything coming out, giving us more giving data dependent Fed that they might keep rates for longer and even possibly keep it for up to next year. There's a higher possibility that a lot of people are expecting to do for the Fed to continue keeping rates higher for longer, up to even end of the year. A lot of people are expecting in September, so let's see what happens. So we reacted around 2350s, and then we started having reactions coming down, same as here. And then we started having multiple bounces, and then we came back down. So you can see there is a double top created around this point, and here, same thing we had here and here. I'm not expecting prices to continue being bearish as the way it is right now, but what I expect to happen is price come down to 2050s before we having some 2050s, 2040s, before we have some reactions to the upside. But for now, let's see what price does around 2290.85s before having any essentially market direction. But for now, we can see that price is reacting around 2300 and then straight away coming down. Once we closed below, we saw that price came down. Same thing here. We saw price coming a break below and came down. Couldn't sustain for longer. As we can see here, the same thing happened. But then we couldn't maintain even above, so creating a double top around this area. Once we broke 2300, we had a massive drop coming down to 2280s. Now let's go and see what we can essentially see happen for today. I'm not expecting much for the next few hours. Essentially, even the news drops that are coming out around this is 4:30 p.m. I have no idea why. Oh, it's in Dubai time. It's at 10 a.m. Eastern time. Once these prices, wait, sorry. Where is it? Yeah, here. Once these data drops, so 9:45 p.m., 9:45 a.m. and 10 a.m. Eastern. Once these data come out, we can see that what the Fed's going to do. So let's see what happens. Now, I'm not expecting essentially much to happen, but I expect these to just show slightly similar or not so much contractions, because anything below 50 is a contraction. So yeah, anything below 50 indicates market contraction. Anything above is expansion. And Jolt's job opening has been quite good recently, even though we had last month dropped, but it's still in the same area, in the same ballpark, but it's still expected to be good. And a lot of corrections made, but it's still sustaining at around 8.5s and 8.9s and 9s. So let's see what prices do. Now let's jump on lower time frames and see what we can do essentially in terms of trade ideas and planning. I expected prices to go to 2300s and then start bouncing off. I had a small position running around here, from here to here, but then it just bounced back straight away from 2295 and then started pushing back up. But we're seeing reactions around here multiple times. This candle, and now it's this. Once we have a candle closure below 2300s, we can see price come down again. But until then, we would just have like ups down and then ups down until we have FOMC, or like the data that we have at 10 a.m. could be just very strong. We can see reactions down, or anything above 2305. We can see buys above that to 2310s, or even 2315s. But let's see what price does next, and we have news in the next 13 minutes. Okay, and yeah, let's just simply just look at what price has been doing. It's been reacting off of like this strong area. You can see that the trend is just bullish. We had a small breakdown and then started bouncing back up straight away, closed above and started to push. Let's see what price reacts around 2300, and I expect price to just, if it closes below, we can see price coming down to 2295 before we have price coming down again, before we're seeing reactions. And we have a 1 minute double top around this area, so let's just go on the lower time frames. Yeah, as you can see, there's a strong 1 minute double top around here, and we're straight away reacting. We came down, we retested the same level and then started to bounce back. And yeah, let's see what price does around this area. I'm not expecting much now. Just we may see some profit taking happen. I expected this move to just purely be profit taking. As we saw yesterday, prices just came down aggressively. Once we hit 2282.5 around 2280s, we had massive push and we had a double bottom around these areas. Now for now, what I'm expecting is this move was purely based on sentiment that price is just going to continue coming down till 2250s, 2240s before we see a proper bounce back up to 2300s again. But for now, this move was purely like, I feel like, not feel like, but yeah, it looks like more like profit taking positions by the institutions, expecting price to drop down later, so they're closing out their position to get better PPI later on. Yeah, see, as you can see, the 1 minute is reacting again around 2-300s, and now let's just jump on the equities and see what they did. We had a massive push up, but we couldn't sustain above this area as the 30-minute opened up around here, and then once we basically 2-7-800, and yeah, as soon as we reacted, we just pushed down straight away. Yeah, and sorry, we had reactions around 38,000, and then we straight away came down, and now we're hopefully closing below because I want to sell, but let's see what price does. We have news too, so let's see what happens. We reacted off of 37,800s. Let me mark these levels. Yeah, here. And then once price breaks below, I'm expecting price to come down, but there's low volatility as expectations are still coming in, and a lot of the markets are waiting for what the Fed's going to do and what the news in the next 10 minutes are. As you can see, ISM is expected to be basically the same, and just by 10,000, yeah, 10,000 to be less, no, 100,000, sorry, 100,000. So it's still around the same ballpark, but it's still fine. I'm expecting this to be revised, but let's see what price does. Now we're acting on gold, the same levels, but then we still couldn't sustain above, like price points, price is just reacting around this area and just like up down. So wait and see what price does, and we can see price coming down to even here later on. Once the news comes out, based on the data, we can see price coming down. And for buy positions, let me mark properly. So all right, so let me mark this out. Yeah, price is reacting. Oh shit. All right, price is reacting to 300s, and I'm expecting buys above around 205 around here. So yeah, and then reactions off of this on around 210s, 310s. So now for sell side, once price comes and breaks below, I want to see a reaction around 300s and then come down, or 2395 and then come down again. For break and retest levels, for safer sells around here, safer risky sells around this point. But for buys, I would expect price to push up, react, push back up, and then for this we can retest 220s even. But let's see what price does for more aggressive profit taking and push up. But for now, we need to wait for data to drop, see what happens. But we're dropping massively, and let's see what Dixie is doing. So Dixie has been we just reacted to 106.5 and straight away dropped. Markets has been pushing strongly. We're holding above 105.5 and 106.5 between this range, and it's just bouncing back. But let's jump on the 4-hour and see what oh shit. All right, yeah, as you can see, price has just been a bullish trend, and with the Fed is expecting that we're going to be, everyone's expecting that the Fed's going to keep rates for the same for longer. We may see bounces of 206, and then once we push back up, but 206 around here, or 205.5s, likely, but I would expect it to be just quick, if not just, yeah, and breaks above 106.5. So once these price points hit, we can see reactions and proper direction in the overall structure. Yeah, let's go. And for NAS, it's the same thing at US30. We straight away reacted at 17,800. It's the same levels, and yeah, we're reacting now at 17,400. We're sustaining below, but it's not as good in terms of direction, but it's just ranging a bit, and Nasdaq is usually a bit delayed compared to Dixie and the S&P. For S&P, we can see price has just been, yeah, everyone's just basing in rate cuts already, so we can see price has just been reacting around these levels. Once we break below 5,000 again, coming down again to 4,800 and possibly 4,600 before we see a bounce back up. So this is what I'm looking for. So price breaks below, retest, comes down, and then even breaks below this. But for buys, I'm not expecting any buys above 5,200. And risky buys will be around here, but safer buys will be around this area for reaching the all-time highs again. Yep. So let's wait for the news and see what price does. Oh, let me go to US30. All right. It's just beautiful reactions recently, so it's just it's beautiful that we reacted straight away from here. And let's see what manufacturing PMI came out the same, so it's okay. And S&P manufacturing Canadian, okay, wait 1 sec, let's load. Yeah, Federal fund rate is still the same, but yeah, everyone's expecting the same. Let's see Fed watch. Yeah. Oh shit. All right, so as you can see, everyone is expecting the rates to essentially be the same. Let's load. We have 5 more minutes to news. You want me to do BTC? BTC has just been like markings. Oh shit. BTC has just been yeah, just reacting off of the almost all-time highs, but and also a lot of news going on around with the people who are involved in the BTC, in the Bitcoin and the crypto market. And since there's a lot, oh, I want to show you this fear and greed index. Yeah, here, so you can see that the fear and greed is in fear zone. Sorry, you can see the fear and greed index is purely on, like, mostly on greed and almost neutral, so they're not like overall. And this is for the US equities. And now let me just look at crypto. It's mostly fear essentially, but yeah, it's a neutral to fear. It was on fear yesterday, but yeah, you can see it was 57s. Now we're back down to 54s. Yeah, let's see what price does in the next few minutes. Okay, let me put back my levels. Yeah, we reacted over 2300s, bang on. If we create a triple top here, which could happen, but it's just shit. And yeah, let's see what overall market is doing. Let's go. After the news drops, I'll leave because I need to do some data work, and then once I'm done, I'll be finished, and I'll post everything I have on Discord again. You can, or Discord or Twitter. Oh, don't want to look at that. Here. Yeah, I post everything around here so you can see. The current market 38% are expecting no rate cuts, fewer than are expecting even a rate hike. So yeah, let's see. And this is, I've written this, hopefully you guys have a read. You can see I explained even a possible stagflation, but let's go. Ooh, 2 more minutes. Let's see what price is gonna do. Yeah, it's just same. It's not showing any signs of contractions or expansions, but it's just being neutral. Manufacturing PMI has been strong for some time. It's just, it came lower a bit and just pushed back up. We have 1 more minute to news. Oh, this is my chart. This is my screen on Twitter. We closed above 2302.5, but Can we sustain? Yeah, it's reacting straight away. I'm going to send my whole FOMC prep on Twitter and on Discord. So you guys just join up. You get access to the same news feed instantly. As you can see, I have Pro, but if you want, you can use the Discord channel and you can get instant access to every news drop. 4 seconds. 3, 2, 1. Joel's job opening was, let's see, 8.5, much lower than expected, and the first contraction. So go pushing. So for now, this is just pushed. We could see reactions around 210s, 208.5s, and then retest of this level and then push back up. But let's see what price does. So just go with the idea of buy the rumor and sell the news. So yeah, straight away reacted. Yeah, data was, this is, as you can see, data pending. It took like what, almost half a minute to come. Instantly everything came out. Yeah, manufacturing, this came, I said manufacturing. Employing index was better, but not that much, but it was better than expected and better than previous. ISM manufacturing new orders was lower, and yeah, this was also lower. Construction spending, this is a lot of expectations in terms of the housing market's been quite shit, and there's 1 in 3 houses that are being on sale. So yeah, you can understand we're in essentially a bubble. And yeah, this Joel's job opening was, let's see, Joel's job opening, and oh shit, Joel's job opening was much lower. Much lower than expected. 8.7 million. And yeah, what? Sorry. What? Hasn't the website latest numbers? When was this come? When did this come? It's February. So this data, the data on financial juice comes before even the actual website. So yeah, ISO manufacturing, the same thing. Yeah, gold reacted straight off of this levels. We can see a possible reactions around here before we push back up, or straight push back ups from here. Once we break above this, we can just see a reaction, straight push, or just straight push above. We need a candle closure above 23.05. Oh yeah, and let's see what this is. Not that much. Yeah, just small reactions and straight away bounce back. And for buys for US30, just wait for buys above here, 850s, push back up, or retest off around here, and then push. Yeah, that's, or just safer buys around this point. Okay, yeah, let me show you guys something. See, this is the weekly economic indicators I posted earlier this week, and let me show you. Okay, where is it? Consumer price index. Yeah, here, order flow. I read this, how order flow works, so you can understand how prices move. Beautiful reactions around this level and then push back up. I'll be here for another 2 minutes and then I'm gonna leave. I believe this is the most comprehensive FOMC report you will ever read. You straight away pushed. GG's. We came, just create a small wick down and push straight up. Reacting around here too. So not bad, not bad. Yeah, okay, so what I'm expecting now to happen is just bounce around this level and then push, or like this, something like this. buys would be nice around this level. If you want to safer buys, like just straight candle breaks, like, or like the flip of this, or like wait for candle to cancel out, close above again, and then you can grab the buys around here and have your stops around like 15-20 pips. Yeah, I think that's about it for me. I've given the trade ideas. We reacted off of here, so be cautious in terms of buys. All right, let's see what price does. I'm not expecting much. All right, guys, I'm just gonna leave now. Have a good day. I hope you're ready for FOMC. I'm gonna post my full FOMC report with charts later on, so everyone can see and have a read. All right, have a good day. Bye bye.